Hi everyone. In today's video, we will discuss what a stock portfolio is and how you should approach this type of investing as a beginner. Essentially, a stock portfolio is a collection of diversified shares across different sectors and share classes. A lot of people who have additional capital at their disposal tend to invest and create a portfolio of shares, as studies show that a well-diversified portfolio outperforms individual stock picking over time. As a beginner, it is vital to diversify and limit exposure to risk, as you should never have all your eggs in one basket. Correctly diversifying your portfolio will help you ride the waves of volatility in specific sectors of the market at any given time. Buffett famously said that diversification is a protection against ignorance. However, he did agree that for beginners and even pros who want to sleep at night, diversification is key, as over time it is extremely difficult to cherry pick the best stocks consistently. For example, person X attempts to cherry pick the best individual stocks 10 times. He might be correct 2 or 3 of those times and see a gain of 20% each time on his investment. However, the other 7 or 8 times he could be wrong, and his investment could decrease by 20% each time, essentially ruining his account. On the other hand, person Y picks 10 blue chip stocks across different sectors of the market. Some may rise 1 or 2%, and some may even fall 1 or 2%. But over time, studies show that your investment rides the bull and bear markets. This trend will always end up in an upward trajectory. A portfolio can consist of as many stocks as you see fit. Here's an example of a diversified portfolio. As you can see, there is different sectors spread across this portfolio, such as the healthcare sector, industrial, IT, consumer discretionary, financial, consumer staple, and energy. You could also include other sectors such as utilities and communications in this also. It is also worth noting that if your stock is a dividend yielding. For example, Coke pays a 2.78% dividend. This creates two forms of income from the one stock. Firstly, through capital gains, and second, through dividends. Compounding these dividends over time makes a huge difference. You can find on Yahoo Finance which companies pay dividends, what the percentages, and how often they pay these dividends. It is very important to constructively rebalance your portfolio to ensure you aren't over or underweighted in a specific sector. For example, if sector A goes up 10%, sector B might depreciate 10%, so it is important you will alter these investments. Doing research is key before jumping into any portfolio, as timing is impeccable. For example, I believe there's a bear market on the horizon, so I feel stocks are still overvalued at this given time. Your portfolio should be personal to you. For example, a guy that is 22 and single with no commitments can afford to take a higher risk-reward approach than, let's say, a 60-year-old that wants to retire in the coming years. Alter your portfolio to your risk appetite and your desired outcome. So, after saying all this, here is my plan. I'm going to wait for a few weeks until the markets fall even more. I'm going to be buying blue chip, high dividend yield stocks. I will be diversifying among the sectors which I have mentioned prior in this video. I will be starting small with a €2,000 initial investment, and I will be monitoring my positions. I will then drip feed in additional funds on a monthly basis to slowly grow my portfolio. Remember, you make money when you buy, not when you sell. So, after saying all that, I would be very interested to know your guys' views on portfolios. Do you agree with Buffett's theories? What your views are on the current stock conditions and the stock market? And even if you want to discuss your own investment portfolios, comment below. Thanks again for watching. If you would like to keep track of my portfolio progress, please click that subscribe and notification bell below. See you guys in the next video, and thanks very much for watching.